This presentation is for Chapter 4, Cost Management Systems, Activity-Based, Just-in-Time, and Quality Management Systems. In Learning Objective 3, we are going to use activity-based management to make decisions. Activity-based management uses activity-based costs to make different types of decisions. The decisions that we are going to examine are pricing and product mix decisions and cost management decisions. So in pricing decisions, we would say whether or not if Smart Touch Learning thought that their production costs were going to decrease, or they have to decide whether their selling prices are also going to decrease. For product mix decisions, those are going to be assessed by comparing the gross profit of two products and maximizing profits by selling more of the product that generates the greatest profit after taking into consideration the production capabilities of the organization. So in looking at the pricing of the standard tablet, we can see that last year the standard tablet sold for $500 per unit and the cost of those units was $300. That gave the standard model a gross profit of $200 or a gross profit percentage of 40%. This year we are estimating, using the traditional plant-wide allocation rate, that the total cost for the standard model will be $273.20, but using activity-based costing, we have determined that the cost per unit for the standard model will be $268.80. If we maintain the price of the standard model of $500, that would yield a gross profit of $231.20 per standard model, or a 46.24% gross profit percentage. So Smart Touch Learning's management might want to decide whether or not they might want to drop the sales price to $448, which would allow them to maintain their gross profit percentage of 40% and possibly lead to an increase in sales volume at the lower price. Now for the premium model, it wasn't sold last year, but let's say that the company expects to sell that model for $600. Using the traditional overhead allocation, we determined that the cost per unit would be $407.20, but using activity-based costing, it went up to $424.80. So the gross profit using activity-based costing would be $175.20, and that would yield a gross profit of 29.20%. So in determining a product mix decision, Smart Touch Learning would have to decide, probably would decide, to produce more of the standard model since it is more profitable than the premium model. So again, to maximize profits, the company should try to sell as many of the standard models as possible, and that's what we mean by making a product mix decision. So for cost management, companies can adopt activity-based costing to get that more accurate product cost for pricing and product mix decisions. So we can also use value engineering. So what value engineering is going to do is evaluate the activities to reduce costs while still satisfying the customer's needs. So these are going to involve cross-functional teams that are going to include marketers that can identify the customer needs, engineers to design the product so they can be produced more efficiently, production personnel to help improve the manufacturing process, and then accountants to estimate the cost. So there are two different ways that you can determine the pricing on your products. You can use what is called target pricing. That is the price that a customer is willing to pay for a product or service. So companies can set their sales prices based on target pricing. So target pricing will start with that sales price and then subtract the company's desired profit to determine the target cost. And that will be the maximum cost to develop, produce, and deliver the product or service and earn that desired profit. Companies could use instead cost-based pricing. That starts with the full product cost, or the cost to develop, produce, and deliver the product, and then adds to that the desired profit to determine the sales price. So this slide just compares cost-based pricing to target-based pricing. Under cost-based pricing, as we said, we're going to take that full product cost, the cost to develop, produce, and deliver the product or service, and then we're going to add to that the desired profit to determine the sales price. Under target pricing, though, we're going to start out with what the price that the customers are willing to pay, subtract the company's desired profit to determine a target cost, which then will be the maximum cost to develop, produce, and deliver the product. And notice that the target cost includes all costs, not just the manufacturing costs, because the company's goal then will be to achieve that target cost. So let's look at how that would work for the premium tablet. So if the target sales price for the premium tablet is $600 and the company Smart Touch Learning decides that it wants to earn a profit of 20%, that would be 20% of $600 or $120, then the target cost for the premium model should be $480. Using that activity-based costing, we determined that the current total manufacturing cost per premium tablet is $424.80. If we add to that our non-manufacturing cost, which would be our operating expenses such as administrative and selling expenses, if we estimated that at $120, then the current full product cost for the premium tablet is currently $544.80. So in order for Smart Touch Learning to earn their desired net profit of $120 and keep their sales price at $600, the Smart Touch Learning Management has got to find a way to reduce costs by $64.80 per unit. And that is going to be the difference between the target cost, which is the $480, and the actual cost of $544.80. And that is how you would use activity-based management to make cost management decisions. And that is the conclusion of the demonstration for Learning Objective 3.